critical employment report. We're going to be watching that closely tomorrow, too. It takes us to our talk of the tape. Whether the enormous end-of-year rally has become the great giveback of 2024 and how much longer it might last. Let's ask Adam Parker. He's the founder and CEO of Trivariate Research and a CNBC contributor back here post-9. Happy New Year. It's good to have you back. You surprised by anything that's gone on to start this year?
Not really. I'm not surprised that, the great giveback. I mean, it's 3 trading days, almost the third one's over. We still got 249 to go. But I'd say not really. I think people knew we were in a chasing Q4 rally, that things were kind of over their skis, and you're going to have a bit of rotation here in the first quarter. So I'm not surprised. And I think it makes sense to look for businesses where the estimates could be achievable that have lagged. Maybe it's healthcare, maybe it's financials. Some of the areas you say are getting a little bit of a relative bid. So I haven't seen that as really surprising.
How much more do you think mega caps need to correct, if we want to use that word, just because the narrative has now become that, well, they got way ahead of themselves, the multiples have grown too rich, so they need to come down somewhat. Is that what you agree with?
Not really. I think those businesses deserve huge premiums, in a market that I think the median stock trades at 17 and change times forward earnings. Do these things deserve low to mid-20s? For sure they do. So that might be a little bit ahead of themselves, but frankly, I was looking at the 2025 estimates for the biggest 20 companies in the market. Mm-hmm. Even if they miss the net income estimates by 10% that's currently in the 2025 numbers, they're still going to have twice the net income they had in 2020. Like, these businesses are just really growing their profits way faster than the rest of the market.
Yeah, so, you said low to mid-20s, but like Apple and Microsoft, I know, but Apple and Microsoft are not trading in the low to mid-20s.
Right. And I think they, Apple's a little bit different than each one of them is a little bit different, but I'd say in aggregate, probably mid-20s is a fair premium. So do I think I have to go lower? Not really. I just think you could see, my view is the median company in the market, the average company's gross margins have now troughed and can expand. And if that's the case, the market will be higher in 6, 12, and 18 months.
So you're bullish for this year?
I think the distribution of outcomes is skewed to the positive, that we end the market a year from now higher than we are now. And the reasons are, one, the specter of Fed accommodation, which will be there. I don't think they'll cut as much as what's currently in the price. But ultimately, if the ECB and the Fed are accommodative, I don't want to fight that. And two, I think the average company can have margin expansion. Combining those two things, that's usually pretty good for equities. Today, right now, 3 weeks, 2, what I don't know. But I think if you look out 6, 12 months, we're going to be higher.
But would you be a buyer of the dip right now in some of these mega cap names, or does that feel like it needs to shake out a little bit more before you be comfortable and confident enough to do that?
Very tactically, probably not.
Not everybody is totally overweight to the same degree. Most of those names, people got bulled up, as the year progressed, because that was a place to make money.
Most institutional investors are way underweight the Mag 7, and the reason is they have, if it's a mutual fund, they have 525 rules where they can't even own the biggest 5 names, can't be more than 25% of their fund, so they're underweight that. Or if they sell one down below 5, they can't buy it back up. So they're holding. So most of the people who run long-only institutional money have been underweight this group structurally, and it's hurt them when they rally. So they wanted to own more. They couldn't because they had, I'll call it, dated risk management, governors. Right? Some of them said you can't own more than 3% of one name. Well, if Apple becomes 7, 8, 9, you're 500 pips underweight.
I've been looking for a lot of contrarian ideas to start this year. Yeah. What are some of yours? Places that we really need to look that just aren't getting enough love and talk?
Payments, maybe. Some of the fintech stuff that kind of got...
Yeah, like PayPal got downgraded today.
Yeah. People think those businesses
I think it's today. I think it's stocks today. Let's put up PayPal if we can, guys, please. I think we're talking about that at halftime today.
Okay. I missed that. Sorry.
No, but a lot of these stocks ran up a whole heck of a lot. There you go. There's PayPal.
Yeah, I think some of these businesses, you look, down the line, maybe it could be. We saw a big rally in banks, but they're still pretty cheap, and they're definitely not loved when you go talk to institutional investors. Healthcare, I think most people think, hey, I liked it, I was wrong, but now it's an election year, so it won't work. But these names look like they have above average estimate achievability.
Well, you've been talking a lot about energy. Like, I like it for many months, and it hasn't really done anything. Is this going to turn?
I'm still overweight energy. I think that we cannot produce what the world will demand, and so we're going to end up having demand exceed supply. I don't know. I don't know anybody who's consistently right on oil on a 3 to 6 month view. At least in the last 25 years, I haven't met anyone.
But the balance of this year, you think it's a good place to be?
I do.